Hey everyone, welcome to our webinar today on this cold winter's day. My name is Tony. I'm the Sales and Partnerships Manager here at GovReports. I want to thank everyone for joining us and taking the time today. We also have from the team, we have Tiana who will be helping me out with some of the questions. Now, speaking of questions, if you do have any questions today for the webinar, please do go ahead and put them into the questions panel. We want to make this a two-way dialogue so you guys can learn as much as possible. We've got about an hour today. We'll try and keep some time at the end for a bit of a Q&A, but if we can get to questions along the way, we'll try and do that as well. If you haven't heard of GovReports previously, just by chance, we began back in 2010. We sought out to build the best lodgement software on the market. Now 2026, we're still building, we're releasing new features and integrations on a monthly basis, and we're approaching 5,000 customers in Australia. And that's with a mix of tax agents, BAS agents, and direct businesses. Now today's webinar is focused on end of financial year processes, so it is aimed at accounting professionals. If you're not an accounting professional, feel free to hang around. You might learn something. I might learn something as well, so don't worry about that. And we've got our expert here today, Maria Landrelli. She'll be able to walk you through the process of handling end of financial year with GovReports. Some of you may know Maria, but if not, Maria is the founder of Your Accounting Solutions. She's a certified MYOB consultant and a member of the Institute of Public Accountants, as well as a GovReports user for many years. And I'm sure she's much more than that. I've just tried to condense everything down into a short spiel. Look, I'll be back. I'll be here throughout the webinar to help with the questions. I'll be back at the end to help with the Q&A as well. But for now, I think we should just get stuck in. So I'm going to hand straight over to Maria.
Great, thanks Tony and Tiana. We'll get in there because I've got a lot of slides there. And as Tony said, please pop the questions in and I'll try and answer them as we go along. If Tiana or Tony could keep an eye and let me know what the questions are. Bit about you, just so that I know, but it's not really relevant if you're a tax agent, BAS agent or an employee. We are covering payroll and we are looking at some of the accounting softwares. So some of the screenshots are either MYOB or QuickBooks, but it's the same concept for all of them. So we're after the concept here. And then there's some screenshots of GovReports. AI image declaration, not all of the images are actual images of me. For example, this one was created by AI, and you'll see me doing some great juggling and things like that. I'm pretty good at juggling, but not always the best at it like these images do. So just be aware, most of these are created by AI. So as I said, I can juggle and it's showing me. So as BAS agents, tax agents, we've got a lot to cover at the end of the financial year. We've got our normal BAS that we need to do. We've got super payments, and come 1st of July, we've got payday super, which is coming in. We've got to do this time around the payroll and STP finalisations. If you've got TPAs, you've got to do that. And then you've got to close off the financial year in your accounting software. And then we've got our dates, and I think everyone's pretty much aware of the dates of the BASs and IASs and when they're due. And if you're a BAS agent or a tax agent, we get a little bit of an extension by 4 weeks. So this is the GovReports software, and you should be familiar with it. This is actually a screenshot of mine to protect the innocent, and I love it. I've lodged 4,062 items through GovReports, and I've got a couple of IASs that aren't started, and I've got one overdue that the client still hasn't got back to me. And my philosophy, especially at this time of year, is when we're very, very stressed, is, well, if your lack of planning is not my issue. If it's my issue, I will stress and try and get it done. But if I've contacted you 2 or 3 or 4 or 10 times and you don't get back to me, that's not my issue. I've done the best I can. So I've been using it, I think almost from the beginning, I think about 2010, 2011. The lovely Deborah Thompson, who's presenting Payday Super tomorrow, did a little presentation of GovReports, and I went, wow, this looks terrific. And I started using it. It's one of the software that I can't do without in my business. I prefer not to go to the ATO pothole, as I like to call it. I do everything through GovReports, and we can check integrated client accounts, we can check bank account details, we can do everything in here. So that's what I tend to do. So it gives you a list, as I said, of the ones that are about to do or need to be done and the due dates that they need to be done by. Then we've got our single touch payroll, which needs to be lodged, STP itself, on or before payday. But at the end of the year, we've got to do our end of year reconciliations and finalisations, and they need to be completed by the 14th of July each year. There are special cases closely held up to the 30th of September. So we've also got the TPAR, which is due by the 28th of August each year, and this is a fixed ATO deadline. That can't be changed, there's no extensions, and it started off with building and construction and then expanded to cleaning, courier and freight, IT, security, investigation and surveillance. Closing off the financial year, we're not really going to cover that, but I just wanted to bring it up as more of a reminder that it is part of your process and things like that. So I generally start to get tired about this time of year. And then to add all of that in, they've now created Payday Super, engagement letters, we've got to do STP, annual authorities, caretaker letters, AML, if you're caught by the AML system, and last year they threw the QMS manual at us. So with all of that, I'm looking even more tired and drowning in paperwork. But the old story is, if you fail to plan, you're planning to fail. That was a quote by Benjamin Franklin. And you basically need to set yourself up to start. And I love GovReports because it shows me what my BASs are due and IASs are due, but it doesn't necessarily show me everything else that I need to do. So I've got this wonderful spreadsheet that I update every year, and I use it for two purposes. One is it's a bit of a caretaker arrangement, and if you haven't got your caretaker, you needed to have that in place by last year. If not, you're actually in breach of the TPB code of conduct, as it's a requirement of theirs. Then I've got what I need to do for the financial year for myself, what I need to lodge with clients or give them, I should say, as well as what I need to do for each client. So as I said, I use it as a little bit of a caretaker arrangement so that if something happens to me, my staff member can liaise with my caretaker, and all of the details are there, the client business, the contact address, telephone number, email addresses, and so forth. Then what do I need to have new every year? Well, this year I've done a Payday Super Authority, and there's still a little bit of a debate. So this is my personal opinion that I should be covered. We've got the usual STP annual authority if it's regular and systematic and then meet the criterias. We need to do engagement letters. Have you done caretaker authorities? Then I've got the what do I need to do for each of those clients, because some have employees, some don't have employees. So do I need to do payroll tax? Do I need to do a workers' comp declaration? Do I need to do an STP finalisation and a TPAR finalisation? And for some of those things, I can actually see it when I'm looking at what is upcoming, and I love watching it go down. But not all of those things are being pulled into GovReports automatically. The ATO stuff is, and it gives us the due dates, but the other things aren't necessarily in there, or I'm using the documentation side of things. So let's look at the engagement letter, and in particular, your engagement letter is more important than ever before because it basically clearly outlines what you do, i.e. bank reconciliations, payroll, BAS presentations, but it specifies what's not included to avoid the misunderstanding between what the client thinks you're doing and what you're actually doing, and scope creep. And it's easy to yep, I can do that for you. Yep, I can do that for you. And then suddenly you go from doing half a day to 3/4 of a day on a particular client. And it sets out the expectations and responsibilities. Now, if you don't have one, go to your associations. I'm assuming a lot of the listeners are either ICB members or ABM members, or if you're a member of one of the tax associations like IPA, they all have documentations. I would suggest that if you haven't reviewed your engagement letter and just kept it rolling over year on year, which is what I tended to do. I had a good look at it this year because I was looking at my systems and processes and went, what has my association got, and compared it to what I need. And I went, there's a lot of things missing. So I did a complete redraft of mine. So if you haven't looked at it in a while, or you set up your original engagement letters a while ago, it's time to have a look at them. So it also provides a bit of legal protection for both parties. Your payments, and is there any late payment policies and penalties, and also things like your pricing. What are you charging them for? Are you charging them a fixed fee? Are you charging them an hourly rate? Are you charging them for software? Are you disclosing that you get commissions and etc. from software companies if you do that? So this is my engagement letter. It's up to page 8 pages now, and it includes a lot of different things that I think are important. So as I said, it puts in what you are going to be doing. So for example, this is payroll matters if I do payroll for them. But it also documents what I'm not doing. So I'm not engaged to interpret or to apply the Fair Work provisions to this business. So if they've specifically tied to a specific award and they're only paying the employees the amount specified in the award, as rate changes, I might say to them, hey, is there, and I do, is there any pay rises that start on the 1st of July? The national minimum wage was announced today. I haven't looked at it yet, but it usually goes up around this time or is announced at this time to start on the first full pay after the 1st of July. Now, this particular year, I've added in something specifically more for the AML side of things, so I don't have to comply. So it's all documented in there that I will be asking them to confirm what they're asking me to pay, or the wages or the super, before I actually process it. That way I'm compliant, and it appears we will be out of the scope of the AML because I don't do a lot of the other designated services. So as I mentioned before, you've got the caretaker, so the incapacity of a tax practitioner, what you need to do, what arrangements you need to have in place. So it is designed to look at the unexpected events of the agent, illness or injury or even death, and things that would prevent you from running the practice. And it can be short-term or long-term. And it's there to not disrupt services to the clients. And I really understand this one because over the last 5 years, I've had 2 colleagues get unexpectedly sick with a terminal illness and die suddenly. And then I've taken over some of their clients, and it was a mess, shall we say politely. It was a real mess. So I can understand having the need to have it in there. So in my business, I then decided to not just have a caretaker but I was going to employ someone and train them to eventually become a BAS agent so they can be my internal caretaker. But eventually I'm looking at retirement a little bit down the track, and have someone that may be interested in taking over my business at that time. So, you know, it's there to avoid having missed deadlines and the disruption to the client and so forth. So there was my caretaker, notifying them who it is, etc., etc. So you've then got your STP annual authority, and it is only there to have the authorisation to prepare STP pay events. It only applies to the STP pay event. It does not cover other lodgements, and it does not cover actually paying the wages if you're paying them, or paying the super. So you would need to have separate declarations for those sorts of things. So there's my engagement letter for the STP covering the year, because it only covers the year. And this is the sort of thing that I then send through the GovReports, and you can see that they've digitally signed it. So I've then got a record of it and they've got a record of it. So as I said, I've also done a payday super letter. There's still a bit of debate, but I used it as more of a notification to the client. Payday super's coming in. It comes in on the 1st of July. Let's get ahead of it. And we're going to start processing the wages and super weekly or fortnightly, depending on what they are, from this date. And they've signed it, so they can't say that they never saw it from you. And to me, that's the beauty of having the Gov reports for all of my BAS lodgements, all of my engagement letters. I've got documented proof. They signed it. It's not something that I've just put aside and, yep, I've sent it to them. I don't have to worry that they have acknowledged it. I get them to acknowledge it. When I send my BASs, I attach a full report. One of the accountants I deal with, he said to me, Maria, they look almost like full-fledged financial statements. And it's then one document that has everything to do with the GST, the PAYG, if there's fuel tax credits, etc., etc. And they sign that document as well as the BAS, so that they are acknowledging that they have seen the transactions, whether they see it or not. And let's face it, most of the clients don't really look at anything too thoroughly. It's like the terms and conditions in insurance policies, but they're signing it to say that they have viewed it. And that's where GovReports is great, because it won't let them just sign it. They have to click on it before they can actually sign it. So let's start off with where I send my engagement letters. I don't like this screen as much, Tiana and Tony, because it only shows I've processed nothing, or 34 of them. Mine was much, much better. So where I go is the digital authentication. So when you go to the digital authentication, you've got the option to send a document. And so I will then attach all the things that I want them to acknowledge and sign: caretaker letter, engagement letter, payday, wages, STP annual authority. If I am sending them, and I just did it not an hour ago, one of my clients, I pay the bills, they send them to me saying, please pay these. I process them in the accounting software. I then create a template saying, please pay these bills, and they sign it to say they have authorised me to pay them on my behalf. Then down the bottom, I can put in the recipient, that they need to sign it, and you can set it to have a security code go to their email address. I love this part of it on the side, which is create a reminder. And you'll notice I always set it to 1 day and repeat it every day. Most of my clients have now got very used to being bombarded with emails until they sign them. So over the last year or so that I've been doing this, pretty much all of them sign it pretty much straight away. The other thing I love about this is you can create templates. So this is my engagement letter and caretaker. It automatically puts in the subject that it's the engagement letters and caretaker, and then the document, the wording that I want to go in the email. So I've saved that message, and I can save lots of different messages. So when I'm setting it up for the next client, I just pick my message, and it automatically then puts in the details of what I want it to say. On the next screen, I can then put in that I want Grace Baker to sign it and where she signed it, and she's acknowledging that she's accepting the terms of my engagement letter. She's personally liable for all fees and services, and I did an ID check on with a driver's license. Now, I understand that there may be something else coming from GovReports to help us with that in the future. So I think, I'm not sure if that's going to be covered in one of the other sessions, but it's not in my session. So they then have to go in and sign it. They will get an email from me if I've set it as a code, because some of them, they sign so many different things. We have an agreed code, but some of them, it'll send them an email. They'll then have to go get the email, two-factor authentication basically, and then I get the notification that it was signed by them. With the blue is the signature that they've chosen. You can actually get them to upload a proper signature. I prefer not to, because I don't want anything with a real signature going through. If they want to do it that way, I get them to do a very different to normal signature, but it's easy for just them to type in their name how they want it and pick a layout that they want to use, and then it comes back to me signed, saying it was digitally signed by Grace Baker on this day at this time. So we've got their acknowledgement if it comes back, and then the different part of it is then the declaration that they are authorising me to access their details in the ATO portal or in GovReports, or wherever we're using the information that we need to access. So as I said, I quite a while ago made the decision that I needed to get everything signed. It is a requirement. You shouldn't be lodging anything or paying anything unless you have a declaration. So this is the example of, it's come directly out of my QuickBooks software in this particular case. It's got the employees' names, it's got hours, it's got gross, it's got tax, it's got net earnings, the SGC, the net plus super, and the pay run. And their authorisation for me to make payments on my behalf to the following employees and superannuation as required for the operation of the business, and lodge the STP pay event. Now, I do it with this one because it is something that changes every month or every week, whereas the STP annual authority covers me for only the processing if it's the regular amount every month. And again, they've then digitally signed it saying that, that I can go ahead. So if I get an audit, I've got the proof there that they have authorised me to do so. So when you're doing your single touch payroll finalisation, you need to have done your pay runs, finalise the pay runs, do the STP reporting and get your receipts, and then the finalisation is complete. Now, most of that is done within the software these days, but I use GovReports to actually send them the authorisation after I've done my checks. So we've got the review of employee details, do the final reconciliations, review the STP data integrity, finalise the STP for employees, the client authorisation to process it, lodge the STP finalisation with the ATO, Post-finalisation checks always go into the software and double check that it's done. Be very much aware that you should be checking the employee details, and in a payday super environment that is much more important, because super funds are now rejecting because they have to have everything processed within 3 days. But I'll cover a little bit more about that in the small bit that I'm covering about payday super. So I usually send a letter to the employees, particularly my big one where there's 30-something employees, just letting them know that there is their income statement will be ready after the 30th of June and it'll be marked as tax ready. No monthly income statements, just a reminder. Please update your details. This year I've included in the information about payday super, but more importantly that the details need to be consistent between the ATO, the super fund and our payroll system, and that we need their full legal name, including middle name, date of birth and address. With this client, we pay fortnightly, and I'm just confirming to them that there is 26 pay periods in the financial year, because sometimes, depending on their payday, they could be 27 fortnights or there could be 53 weeks. And that can often push them up into the next tax bracket. So it is a courtesy to them. So once you've done all your reconciliations, you review your data, finalise the STP for the employees, and then the client authorisation. And this is where I use GovReports to process that, then go back to the software after I've received it and finalise it and just make sure everything went through. So part of that is doing my reconciliations, and this is where I use the software. And I have checklists for everything, because it's often easy to miss things at this time of year, particularly if you're rushed, if you're tired, if things have gone wrong and you've got, you know, in my case, I've got about 40 STP finalisations to do and about 6 TPARs. So I actually started reviewing the data for the TPARs about 3 weeks ago and discovered an issue, which I'll cover when I cover the TPARs section. And that way most of my reconciliations are done when I've got a bit of extra time and it's quieter, rather than when I'm in a rush to try and process it. But it's also there to show where you arrived at the figures during your audit, and it allows you to complete it in a logical manner. And even me, I've been doing this for 30 years, but it's been a year since I've done the STP finalisation. So it's a refresher. And it's useful from an audit point of view. Now, I try and do my reconciliations for my clients monthly or quarterly. That way, at the end of the year, pretty much most of it is done and you're picking up errors early rather than later. And as I said, particularly with payday super, that's more important with our 7 days to do it. Now, this is an example of a very old copy of MYOB. You know, your payroll clearing accounts need to be 0. Your superannuation paid need to be 0. QuickBooks does exactly the same. Xero does exactly the same. So I will reconcile the payroll clearing account, the PAYG, and the superannuation liability exactly like a bank account, but the main aim is to get to 0, not to reach a balance in the account per the bank statement. So you're then marking off the payments against the liability that's there. So in this particular example, we've got a weekly person that's there, and we may not have had the details yet, but the others are all then matched off. So I like to then print a general ledger summary and attach it as part of my papers for the client and for me. In this particular example, and I'm going to leave the error in there, I'm purposely not fixing it in the examples that I'm showing. The payroll clearing account, the debits and the credits needed to match. They don't. It's out by $469. The super at the end is $3,175.32. So it's then looking at the detail again, which I provide to the client, that's showing all the transactions. And then when I look at it further, I can see the 19th of June has been processed and it's gone through the bank account. We've got the journal for the payroll, but the amount may not have been paid yet. So in which case I would go and have a look, has it been paid? Because if it hasn't been paid, or is it just that our bank feeds haven't caught up yet and it hasn't been processed? So this is an example of my checklist that I do, and it's got things like reminders, not so as important these days because with an STP, everyone's putting in their tax file numbers, but it's still useful to know if it's a new person and they haven't, they've applied for a tax file number, but they hasn't received it yet, what numbers you put in. Are they under 18, what tax file number you put in. Then the reports that I need to print, my clients are either MYOB or QuickBooks mainly, so what reports I need to print for those ones. And then my reconciliation, what's been processed through payroll and what's been processed through the general ledger. And I'm then showing what the variances are. And if there is a variance, then on my second sheet, I can then find out where the variance was. Is there things like salary sacrifice? Is there fringe benefit tax? Do I need to contact the tax agent after they've done the FBT return for the amount that needs to be put on the S2P finalisation for them? Are they exempt fringe benefit? Are they a charity? I had a charity that had exempt fringe benefits. So all the things that you need to have documented and your double checks that are there. So this is then what I create, again, to have it sent on as a digital authorisation through GovReports. I've got the gross to net report, if you're familiar with QuickBooks online. And then I've got my general ledger summary of the accounts that I need to reconcile. And I love colour coding things, so I can see straight off the colours that match. The taxable earnings equals what's in wages. The two superannuation amounts equal what got processed through payroll. I purposely, as I said, left my payroll clearing error in there, but normally you would make sure that there's either a reason for the error, i.e. it hasn't gone through bank feeds before you'd proceed. If not, you'd look at it. And then they have digitally signed that for me, so I can actually go and finalise it in the software itself. Or I actually do still have, strange as it may seem, I use the PAYG, the old payment summary still in GovReports because I've got a old school as well as older tax agent who didn't want to do the STP himself for some of his clients, and they were closely held. And at that stage, we could still do the closely held quarterly. So in fact, today I got the email from him saying, please lodge this as the STP event for the March quarter. So same thing, I will then process it through GovReports and get him, because he is the authorised contact that the client has delegated, that he instructs me on what he wants me to process. Now that is going to change from the 1st of July because he's also got to pay the super electronically within 7 days rather than quarterly, but that's another story. So that pretty much covers the STP. Tony, Tiana, is there any questions in there that people have put in there?
No, nothing at the moment. So if anyone does have a question, feel free to pop it into the questions panel in the top right-hand corner there with a little question mark. But we're good. We're good to keep going at this stage.
Great, terrific. Well, sorry, Tiana.
No, all good. I was gonna mention, love the term that you used, the ATO pothole. Some notes on that. And in terms, you mentioned that you didn't like the dashboard, the screenshot of the dashboard. Well, the dashboard alignment, you can customize that. Each user can customize it.
Oh, no. I was only talking about I've processed 4,000 items through GovReports, and yours was only showing 34. I love the customization of it.
Right.
I was being cheeky. I was being very cheeky. So no, Tiana is quite right. I have on one of the screenshots got what it is as standard, but you get rid of what you don't need. And for me, I love seeing how many I've lodged, and I love seeing what's upcoming. So that is by far, I go in there and look at that constantly as I'm updating and processing and things like that.
And you also mentioned the KYC, knowing your clients and ID your clients. AML and KYC, unfortunately, we are introducing them into GovReports. Unfortunately, the workflow, the work items has been delay. So due to the super payment features, we're delaying that. So it will be sometimes after the end of financial year.
Yeah, so you're not going to need that straight off anyway. So payday super was definitely much more critical for us.
Correct. All right, back to you.
Okay. So let's move on to the TPAR. So before you preparing your TPAR, you need to, well, one is, do you need to lodge a TPAR? Now, if you've got clients already in those industries, you know that you have to prepare the TPAR and it will come through GovReports. If it's a new industry that's introduced, you might not be aware. So it's always a good idea to go and have a look, you know, which are my clients that are still in or out. And some of them may not use contractors, so you'll have to lodge a nil report, which I love seeing that when I reviewed it this year. That's a new change, Tiana, that you can lodge a nil report through GovReports, which is absolutely amazing. Love it. So you need to review your contractor information, reconcile checks against your general ledger, against the payments, do your review before lodgement and record keeping, because we need to keep our records. So as I said, review, does the business need to lodge? What industries are there? And I've mentioned them there. Are the contractor records up to date? You know, confirm the everything, confirm the payments for the financial year have been made, have the contractor invoices been coded accurately, review duplicate or missing payments, and confirm the GST has been recorded correctly, because we are obligated to go and check ABN numbers at least once a year. So those are the industries. As I said, building and construction, I think it's been, this year it's about 15 or 16 years. Cleaning and courier then came in not long after that, and IT and security and investigation came in about, I think, 3 or 4 years ago, something like that. So as I said, it must be lodged by the 28th of August. There is no extensions on that. There are some things that you don't need to report, and the ATO view is if in doubt, report it. But things that are materials only, you don't need to report. Is it incidental labour? So for example, you might have hired a crane and an operator to do the crane, but 90% of it is the cost of the machine hire and 10% of it is then the operator to do it. So that may not need to be included. Unpaid invoices after 30th of June, they're only after the ones that are paid pre 30th of June. Workers under a labour hire. If you're doing PAYG withholding, i.e. it's an employee under STP or contractors who don't quote an ABN, because you do that under a different system, you can't report them under the TPAR. Payments to foreign residents, etc. So as I said, you either do a TPAR or a payment summary where the ABN is not quoted. So you only do one or the other. You don't do both of them. So if you've got an ABN and they fall under TPAR, you would go to TPAR. If they don't provide you an ABN and you do a withholding, then you do the PAYG payment summary where you've withheld for no ABN quoted. And that's an example of the form that you would need to complete if they haven't quoted an ABN. Personally, if I'm paying the bills, because I hate then having to hassle clients for information, no ABN on the invoice, or it's not in the right form, or recently I had one that he was charging GST and his ABN, when I checked it, was not registered for GST. Sorry, not getting paid until I get a proper tax invoice in the right requirement. It just saves us a bit of sanity at this time of year. So you need to ensure the contractor records are up to date, the business name and ABN and address and contact details. And it is easy where, particularly in construction industry, where they start off as a sole trader and then for whatever reason they decide to change to a trust or a company structure, you might still be recording them under the original ABN. So you need to double check those sorts of details as well. So you need to review the ABNs using the Australian Business Register, confirm the contractor name matches the ABN records, review missing or invalid ABNs, and follow up those contractors. Now, if you're not aware that you can do the ABN lookup individually, but there is a tool that you can use where you can download a spreadsheet. And that's an example of the spreadsheet. I've left the ABN numbers listed by the ATO, but you basically copy and paste the ABN or ACN. Because I record it in the accounting software, I just export the list and then copy and paste it into this Excel spreadsheet, and then start the lookup. And it very clearly shows me the name. Is there a business name, which, as we know, will be disappearing? Funny how Bunnings always comes up, isn't it? What the trading names are, business name, trading name. Are they active? When was the ABN status? What state are they in? What postcode? Are they registered for GST? No registration. The dates, the start dates, are they DGR, and so on and so on. So you can quickly do a double check of all of your contractors that you have, or any supplier for that matter, at least once a year very quickly by using this. And then when you're ready, as I said, you just hit the start lookup and it pre-populates all the fields. So once you've confirmed everything, then you can do your reconciliations. So as I said, this is your steps to check what's been done. And then you're reconciling the contractor payments to the P&L, to the bank transactions. Are your bank recs up to date? Are there any cash payments to contractors, credit card or reimbursements? And then exclude the things that aren't reported under the TPAR. So run your TPAR summary report from your accounting software. Actually, I think I skipped past a screen. Let me just double check that. No, it was fine. So there's your taxable payment annual report that comes in this particular case, I'm using QuickBooks to get the information. Now, if you are using QuickBooks this time around, they have changed something, and I'll get to the screen that shows it. So in this particular case, I can see that the GST doesn't match, and I've got one of my suppliers that has one with GST and the rest needs to be excluded or ex-GST. So they may not have been registered. So that's my prompt to then, well, were they not registered for GST and then became registered? And usually I would check this as I go along, but it's still a good idea to just review it when you're doing your annual review as well. So you're then checking it against your subcontractor payments. Now, I like to have all the subcontractors in just one area in the P&L so that I can easily double check the information. And then reviewing it against the TPAR report to make sure that it does in fact match. Now, as I mentioned, this year, QuickBooks has changed two things in the software. They now want you to have a address in a country in the address, which they never did in previous years. So I discovered this when I was doing the review of my clients that do the TPAR. I've got one in MYOB and about 3 in QuickBooks. And when I went to download it, it would not even let me download the report until I had fixed this. So this is a good idea for you to be able to go in and fix these up now in June before you have to lodge, review it and lodge it sometime in August. And for our sole trader, it didn't like that the name was empty as well. So you can then go and review that information. Once you've done that, you've got various options that you can download it and you export it to an e-file. Now, this is the other change that they made because previously it was created as a different file name. So it's now calling it an e-file, whereas previously it was a CNN file that you uploaded into GovReports. So the simple fix is you've just got to rename it from e-file to CNN. So there's my example. That's what it was originally called. It's called an e-file, and then you rename it to CNN instead, which will then allow you to, when you go into GovReports and do your taxable payment annual reports, you can then upload the CNN file. Even though it had the CSV option in QuickBooks, I found when I tried to import that into GovReports, there was so much mapping that I wanted, it needed to be done, that it was just making it difficult. So you're picking your financial year, it's covering the periods. Is there grants? Because remember, the TPAR isn't just for contractors, it can be for grants. You can individually add it in, but it's much easier to import in the CNN file. And then when you do click import, it will come up and tell you that there was however many contractors there were they valid, were there any that were invalid? And then you click the import button, which will then populate the information into there. It's then got the details of the business, telephone numbers, addresses, and so forth. We've got the declaration that we're preparing it and they are authorising me to do it. And I then validate and send for signatures. And as I mentioned, this was something new that I noticed this time around because most of mine are have contractors, but occasionally there's years for my very small plumbing client that he has no contractors. You can do a non-lodgement advice, so it is still going through GovReports. You're getting a signature that you can lodge a nil return for them. So it then prepares this document for me, which has the name, ABN, the contact details, the contractor details, then my details, and then they have the signature panel, which I then send that off to the client and they then e-sign it for me and it comes back to me. So just a reminder, the TPAR needs to be lodged with the ATO by the 28th of August. Then save your lodgement confirmation, and then provide the client with a copy of the lodged TPAR if required. So record keeping side, you need to retain the contractor invoices and payment records, and most of that is within our software. Keep your TPAR work papers and reconciliations. And for me, my policy has always been that I give my client all of that detail, because if I get hit by a bus, I don't want anyone scrambling to try and find information. They get what I have. They don't get my checklist, which I do for the STP, but all the reports that I print out of their software, I provide them with it at the time. And then for my side of things, I store the signed authorisations to my proof if I have an audit from TPB, from ATO, and from the industry associations I belong to. So any questions? I'll keep going unless Tony or Tiana interrupt me.
We just had a question about TPAR. Do the TPAR show as outstanding in GovReports automatically, just like the individual tax returns and BAS? And we've replied, yes, they do.
Yes.
We've just got another person saying the sound keeps going in and out. The sound on my end's been fine. So it might just be... Yeah,
I'll just put the microphone up a bit more. Is that a bit better?
Yeah, look, I'll keep an eye on it. I haven't had any issues, but I'll keep an eye. But that's all we've got so far.
Okay, terrific. So unless if you're a BAS agent, a tax agent, you've been living under a rock, I think we're all pretty much aware that payday super is coming in on the 1st of July. I made sure that I started notifying my clients last year. In fact, the year before, I was telling them it had come through, even though it still hadn't received royal assent at the time. And most of them, funnily enough, actually said, oh, well, that's great. If we can do it in the software, we'll start paying it now. I'd rather do that because of cash flow. The ones that didn't, it was more the ones that they were closely held. So I used to process their wages as I did the BAS. That was the notification that I sent them that we would be starting to do it from the 1st of May. I set myself as a deadline that we would then be logging into their file weekly or fortnightly and processing the pay event and the super at the same time, just to get them used to it. So it is coming in. As I said, there is going to be tomorrow. Is there still room? Hopefully there is, that you can register for tomorrow's Payday Super with Deborah Thompson. And it's going to show you the GovReports solution, which is great if you have been using the ATO clearinghouse, which has got a very hard close of 30th of June. So the old system was employers could pay the super every 3 months quarterly. They could do it quicker if they wanted to, but our new system is that it must be done at the same time as each pay cycle, so weekly, fortnightly or monthly. So in other words, when the employee gets paid, the super gets paid too. So as I said, it is a very hard close, 30th of June at 11:59 p.m. And once it closes, you will not be able to access or download any of the records. So if you have been using it, you need to go and download any of the reports that are in there or the employee records and payments, because in the case of an audit, you will need to have the information from that to prove it to whoever is doing the audit. They do have the alternatives. They're telling you to do it prior to the 30th of June. As far as they're concerned, that the January to March quarter is the last quarter for which you use the Small Business Clearinghouse to submit and make payments, and that you're not going to be able to do anything after the 30th of June. So they have definitely been notifying everyone to make sure everything is downloaded. So Payday Super, if you haven't had a look at it, there is a law companion ruling about Payday Super. It is still in a draft stage, but what it basically is that we know is that starting 1st of July, the super must reach the fund within 7 business days of payday. So basically, the ATO intention is to reduce the unpaid super, of which we know there's a lot of, and the compliance that goes with it. But they've also made some changes, and they've changed the wording. What was ordinary time earnings is now qualified earnings, and so forth. So there is still late penalties, but we no longer will need to fill in a superannuation guarantee charge statement. So the onus goes from us to the ATO. They will be doing their compliance, they will be doing their auditing, because they will be matching the records from the super fund with the ATO records of what's been lodged through STP, and they will be penalising the business. Just as a thing, Section 4 of that ruling, there are no exemptions for cash flow issues, payroll system delays once it's operational, waiting for quarterly batching, admin backlog, or employee delay in providing details beyond the onboarding window rules, and I'll explain what they are at the moment. So basically, there is no excuse for why you haven't paid it. So there is a exemption to the 7-day rule that you have 20 business days after the employee's first payday. So that is your first exemption. The second exemption is if an existing employee changes fund, you've got 20 days from when they switch to do the next payment, but I don't recommend that you wait, because you want to make sure if there is a problem with the fund, you get the rejection straight away. There are exceptional events that are the Commissioner's discretion, like we do now with the BASs. If there's a natural disaster, floods, fire, cyclones, if there's major system outages, banks, payroll, superstream, or serious business interruption, insolvency, or IT failure. So there is another exemption, but not really. If the payment is rejected by the clearinghouse or it fails, the fund must return the money quickly, around 3 business days, and the employer must fix and resubmit promptly. So it gives a timing relief for penalties that may be imposed, and I'm going to talk about the penalties shortly, but you've still got to show that you did it as quickly as you possibly could. So an important note is that a rejection does not automatically reset the 7-day clock. As I said, it only applies to whether the ATO applies penalties, where the situation, the fault does not lie with the employer themselves. So why are they rejecting? So the common reasons they are rejecting is mismatch of personal details. So I know one of the super funds, Panorama, I know another BAS agent notified everyone that the Panorama rejected it, where it had never previously been rejected. And they quoted them that it was because the names didn't match. Now, it could be that a middle name was in the accounting software or with the ATO, but not with the other two. Hence my letter that I was sending out to, or have sent out to my clients' employees, to please go and check that so we don't have it rejecting. The other thing is legal name changes. So, for example, they've been married, they've notified you, or you know they got married, and so you update it to their new married name, but they haven't updated it with the super fund or the ATO. Outdated residential addresses, so the address on your file doesn't match what the ATO has, so that can cause it to reject, or missing or incorrect tax file number details. So as I said, I am letting them know, please go and check. Now, is it going to fix the problem? No. But what I'm trying to do is circumvent and get as many of them fixed before it becomes a hard issue. Because basically the ATO is requiring the super funds to only hold on to it for 3 days and reject it if they're not going to put it into the employee's account. So to give you an example, I had a new starter in March. I elected to start doing payday super as I pay her. I pay her on a Friday. She works 3 days to the Thursday. I tend to process it on the Thursday, but payday is officially Friday. So I process the super on the Thursday as well. It comes out of my bank account on the Thursday. And when she first started, just to make sure all the details were correct, I asked her if she could check her super fund, and it is not a requirement. This was just me wanting to do this. And she told me that it hit her funds on the Tuesday. So it came out of my bank account on the Thursday and it didn't hit her account till the Tuesday. So while we have 7 days, you've got to allow for the clearing houses to get the funds to the super funds, and then the super funds to actually allocate it to the employee's account. So currently, super is generally calculated on ordinary time earnings, but as I said, it's now under qualified earnings. And it's basically much broader and designed to simplify and standardise super calculations. So under the old rules, the penalties and interest were, super was calculated on ordinary time earnings, but if you had to fill in a superannuation guarantee charge statement, then things that you didn't pay super on suddenly became included. Well, generally those things are now included. They are the same for both what is ordinary time earnings and what qualifies for the penalties. And the penalties are quite severe. So this is directly out of that ruling. It includes ordinary time earnings, all award payments and shift loadings, all commissions. So there were some commissions that weren't picked up as ordinary time earnings. They are now all included. So it's basically the Law Companion ruling is aiming to reduce the debate of what is or is not ordinary time earnings. So go and have a look at the ruling and it'll just give you more clarification and easier for us. It's a bit more black and white rather than grey. So this is the difference between the two, and I actually wanted to bring up the information about the fines. Firstly, what's included, I've got the difference between the two. And then the difference is the penalties. So the old penalties were at 10%. The new penalties are up to 60%. So when the client says, oh, I don't have the cash flow, my response is going to be, well, would you rather pay a 60% penalty on top of the super? You need to organise that the super needs to be paid. You've had plenty of notice. Yes, it's going to affect your cash flow, but you need to allow for that. So it just means that in the payroll, we need to have more accurate treatment of the allowances and overtimes, stronger payroll controls and reconciliations in there. And because of this, there's also more earning types that may get super that were never previously super, more frequently, definitely, and a lot less room for timing delays. So as I mentioned, the penalties and interest is dependent on if the employer, there is no requirement to do the superannuation guarantee charge form anymore, but they've replaced it with this thing called a voluntary disclosure statement. So you can notify the ATO of a late or missed payment, and then they can use their discretion to reduce or eliminate the 60% administrative uplift penalty. And the payments are then made to the employee's super fund, not to the ATO as was previously done. So as I said, previously it was a 10% sample interest, $20 per employee per quarter, whereas now it can be up to that 60%. So the ATO have indicated that they're going to have a low, medium and high risk rating of businesses, and if you are low risk and seeing that you are complying, they will not be penalising. So if they can see that in that first year in particular, that you tried to do it within the 7 days, and if something rejected, you resolved the issue quickly, then you shouldn't be focused on compliance issue. They're not going to be going after the people that are trying to comply and have always complied with the quarterly dates. What they are after is the ones that were just not paying super or were consistently paying it late. But the first year is definitely about education, and then after that, I'm assuming they are going to hit hard. So it is still a draft ruling, so it's the ATO proposed interpretation. Consultation has occurred with the industry funds and will continue to occur, and then the final ruling is likely to change before implementation, but it's still worthwhile going to have a look. Now, there is just a couple of other things. We have gone a little bit over, and I hope that's okay. Understand if people need to leave. The concessional contribution cap changes on the 1st of July. It goes from the 30,000 to 32,500. But there is another very big change, which I haven't heard much about, which is the maximum super contribution base is now changing from quarterly cap to an annual cap. So this is one of the biggest changes for high income earners and payroll systems. I have not seen any software make any changes to this so far when I've been looking at it. So with the quarterly, we had a quarterly cap, and I'll have an example shortly, that if they went over the quarterly amount, then you didn't pay any super on top of that amount. Next quarter, they were below that. You didn't go back and redo the super from what had been missed in the previous quarter. Each quarter was standalone. However, from the 1st of July, it is now an annual cap, where they may hit the contribution sometime, for example, in December if they're high income earners, and you will have to manually track that until the software changes or if it changes, but it's still a good idea to keep an eye on that. So as an example, we've got our per quarter is currently $65,070 per quarter. We pay super on, or $260,280 per annum if it's earned evenly over each quarters. So for the employee, it creates inconsistencies where one large quarter it hits the cap early, and then later quarters they get less or no superannuation guarantee. So come 1st of July, an example is someone quarter one gets 120,000 bonus commission. So it's usually real estate agents and people like that. And then the next 3 quarters, they have a much lower amount of 30,000. You don't go back to make it up to the the quarterly cap amount. So in this case, they get the SG on the first quarter up to the cap, and then the rest is ignored. So what that means, and I've got the example here side by side, the annual on their 120,000, they get the 12% super on that. Then it continues until they hit the annual cap, which is to be confirmed. It hasn't been confirmed as yet, or at the time I created this, but it's expected to be with the limit and the changes to wages and indexing, that it's going to be 270,830 for the 26-27 financial year. So it hasn't been confirmed yet, but it's around that figure is what they are talking about. So here's your example, quarter one, 65,000, quarter two, 65,000, then 65,000. So on my example of 120, you only have the super paid on the 65,000, then paid on 30, 20 or 10, for example. Here, it's paid on the full 120,000 post payday super. Then quarter two might be less, and then by quarter three or quarter four, they may have even less than that. So again, you need to review and reconcile it, check your compliance, finalise and report, plan ahead, and then complete everything that you need to do. So again, if you fail to plan, you're planning to fail. So plan ahead and do as much as you can with the March quarter BAS or in June, then create a plan for what you need to do for each client. Have your checklist, and do take some time for yourself during this busy period, because you will be much better off if you do. As I said, the philosophy I like is the screenshot at the back of me, and it's not my real office, by the way. This was created by the AI. A lack of planning on my client's part does not constitute an emergency on my part. So that ends it. Tony, Tiana, is there any final questions that anyone wants to ask?
Thanks, Maria. Great job as always. We really appreciate your expertise on matters such as those. So thanks again. If there is any questions you wanted to ask, now's a chance. We've obviously gone a little bit over time. We understand you're probably getting hungry, but if you do have any final questions, feel free to pop them in now. While we're waiting for a minute, I'll just mention that we do have a webinar tomorrow. Tomorrow 4 p.m, which will cover a new payday super feature. So if you want to learn more about that, jump back on the website.
That will be for business though, for BAS and tax agents on Thursday.
Oh, there you go. Thanks, Tiana. Yeah, sorry. So Thursday will be the one for you guys. But you can check out the rest of the webinars on our website. We've got half a dozen listed there at the moment. And just coming back, it doesn't look like there's any more questions. So, look, thanks everyone for their time. Really appreciate it. If you do think of any questions, you know where to find us. You can get our contact details on the website, govreports.com.au, and you can contact us by phone and email. So I think we'll wrap up.
Great.
Thanks,
Thank you very much.
Thanks, everyone.
Have a good night, everyone.
Bye.
Bye.